as well. I also want to thank the support of OECD through program of CEFIM, and also to Triple GI to arrange this event. Ladies and gentlemen, up to now, the clean energy project is still perceived as a high-risk project, which furthermore lowering the interest of financial institutions to fund the project, due to lack of understanding about the business, as well as lack of technical and other supporting data. To back up the evaluation and financial assessment of the projects, the government has been and will keep improving the quality of policy and regulation to support clean energy, and by providing various incentives to encourage investment. Nevertheless, the current COVID pandemic impacted all the our life activities, including the energy sector, significantly. The electricity demand has been dropped, and the electricity oversupply creates more challenges to utilize clean energy. These challenges need to be addressed comprehensively and conductedly continuously, not only by the government, but also by the project developers and the financial institution, and of course, all stakeholders related to the energy sectors and financial sectors. For the financial institution, I have learned that the insurance company can also play a crucial role by providing a product to mitigate the risks of clean energy project, or the risking the project. Therefore, we are here today to share knowledge and information and how the insurance industry can support the development of clean energy sectors in Indonesia by inviting some experienced companies, experts, and also ideas from the forum today. We also will hear the views from Ministry of Energy and Mineral Resources and OJK to give us a background and how the policy and regulation can strengthen the clean energy investment. Last but not least, the insight from the clean energy developers will become valuable information for all of us. Once again, I thank to the speakers, participants to the event. I'm sure we will have a fruitful meeting that I hope will become a snowball to accelerate the finance and investment to clean energy in Indonesia. Thank you, and have a very nice discussion. Thank you. Back to Pak.
Ya, baik, terima kasih Pak Dida as the strong message from Pak Dida. So we are here to listen, to exchange knowledge and information with all of the related stakeholder. So without further ado, I think we need to start because we will have a bunch of presentation. I think we hope also there will be a good discussion. So for the first session, I will I will ask Cecilia, Ms. Cecilia from OECD to moderate the meeting.
Thanks.
The floor is yours, Cecilia. Thanks.
Thanks very much, Ang. And thanks to all the participants and speakers for joining us today. And thank you, Pak Dida, for your welcome and introduction to this webinar. We're very pleased at the OECD to be able to collaborate with MENKO on this event. My name is Cecilia Tam. I head up the OECD's Clean Energy Finance and Investment Mobilization Program. And we're very happy to be able to support Indonesia in accelerating its clean energy transition and to help support and provide forums such as today's discussion to look at new solutions that can unlock new additional capital for investments in the renewable energy and energy efficiency projects. We see that there is quite a lot of potential within Indonesia to deploy renewable energy and energy efficiency development, and that Indonesia could really become a major clean energy market. But despite this great potential, progress remains disappointing and well below the level needed to meet the country's renewable energy and energy efficiency targets. For this first session, we have four distinguished speakers who will help frame our discussion today to really better understand what is the current regulatory framework in the energy as well as in the financial services sector that is trying to help de-risk projects and facilitate greater access to more affordable capital for these projects. We will hear in this session from four speakers. The first will be Chris Narwan, from the Director of Various Renewable Energy at the Ministry of Energy and Mineral Resources. Then we will have Pak Maman from OJK, Deputy Director for Research, Development and Management of the non-bank financial institutions, followed from insights on certain challenges for renewable energy development from Pak Sofan, CEO of Radiant Utama Insurance. And then finally, we will have a presentation looking at the opportunities for insurance to facilitate energy efficiency project development from Pak Bintang Windhana, Senior Researcher at the ASEAN Center for Energy. So with that, I'd like to turn it over to our first speaker, Pak Chris Narwan Anditya, Director of Various Renewable Energy. And if we could pull up Chris's slides, please. Chris, the floor is yours.
Thank you, Cecilia. So if I may, I will try to operate my presentation by myself. So good afternoon, ladies and gentlemen. Allow me to share what you call the effort of our ministries, particularly from DG of New and Renewable Energy and Energy Conservation, as an effort to lowering clean energy risk through the government regulations. So I will try to give a brief the information related to the energy sector commitment toward net zero emission, and then the government program for new renewable energy development. And then we'll talk also about the risk that will happen in developing renewable energy, and how the government try to lowering the risk, the clean energy or renewable energy development through government regulation and closing. As you may know that our president already shows the commitment to also participation in reducing the emission. And in this case, our government already doing ratification of the Paris Agreement, and we committed to reduce our emission by 29% by our self-effort, and 41% if there is international assistance or support by 2030. And one sector to contribute to reducing the emission is come from the energy sector. So it is already stated that the contribution from energy sector to reduce the emission it should be 314 million tons of CO2 until 398 million tons of CO2 if the target is 41%. And in order to commit our target in reducing emission, then one of the main contribution is from developing renewable energy. And the other side is implementation of energy efficiency, energy conservation, as well as the application of clean energy technology. And just recently, during the Leaders Summit on Climate, our president also already shows the commitment again that we are trying to encouraging green development through development of green industrial park, and also trying to unlock investment in the energy transition through the development of biofuel, lithium battery industry, and electric vehicles. And as a part for developing of renewable energy, actually the ministry already prepared what we call the national grand strategy energy, that the time horizon up to 2035. And under this document, Indonesia is committed to develop additional capacity of renewable energy until 38 gigawatt until 2035. One of the renewable energy to be prioritized to be developed is solar energy. It is because the cost is already competitive enough and the installation duration of the installation is very fast. And one of our effort to accelerate the effort of developing a new renewable energy will be our strategy through a primary final energy substitution. This is actually by utilizing the existing technology, so we don't need to change the existing technology instead of to use it. For example, we are trying to implement B30 and trying to also increase to B50, and co-firing program is underway. RDF utilization is also ongoing. And the second one is a fossil primary energy conversion. So under this program, under this strategy, we are trying to convert the technology. So this is will be due by converting diesel power plant or coal power plant into the new renewable energy, and trying increasing new renewable energy capacity by developing solar PV. And then utilization of non-electric new renewable energy and non-biofuels such as briquette, drying of biogas agriculture product. And as a part for achieving this program strategies, then we are trying to implementing the presidential regulation regarding the price of new renewable energy, and trying to revise also ministerial regulation regarding rooftop solar PV. Of course, we do understanding in developing renewable energy in Indonesia, there is some challenges. There is also a risk exists, and we are as a government is not adapt that trying to hear the feedback, the comment from the developer investor. So if you look at actually based on the input from the developer and investor, there is some risk need to be mitigated in development stage, and then the construction stage and the operation. Some of the risks are already displayed in the screen. And of course, the government through the Ministries of Energy and Mineral Resources not silence. We are trying to improve our regulation in order to lowering the risk investment in developing renewable energy. So I will try to give some brief regulation that we are trying to lowering the risk renewable energy project. One of them is trying to prepossessioning of authority. As you may know that before, most likely there is some authority, not only from the central government, but also in local government through the provincial and then the district or the in municipal. In this case, through the existing regulation, now the authority is just divided into two. In the central government is through the minister, and then in the provincial level through the governor in part of the issuing the electricity supply business license. The second part is we are trying also the ease of permit, because many investor developers says that permit processing in Indonesia is sometimes cumbersome, takes time, and then there is no clarity when the issues or license can be issued. Then actually before, if you see in the top of the table, before, if you are trying to apply for the electricity supply business license, you need to meet with the 9 or 10 requirements, and the time period for completion of your license, it takes 30 days. But now, as see in the screen, the requirement that you need to fulfill is only a remaining 2, and the time period for completion is just 5 days. And then you can see in here the processing is very clear, and then you can also trace what you call the license that you are proposed. And in order to make it more transparent and easy for investor, developer in applying a license, one other regulation, and in part 4 there is the renewable energy project, is we are trying to establish online permit process, so you don't need to bring very thick a document to come to its ministries or institution. Instead of, you can just stay at your location, you just using the laptop and then trying to log in, and then the license will be given to you with the very certain and firm days to issue. The other one is we are also providing in our regulation related to the guidance of the PPA. So if you want to know what kind of the content in the PPA later on will be provided by the PLN, then how long the PPA can be what you call given, and then what the scheme of will be offered, even though we still get the existing one of the regulation, we are still apply the BOT scheme. But later on, I will try to give you also the information what the government do in order to revise the BOT scheme. And in this regulation, we also trying to make a balance between the interests of the developer investor, and then in the other side with the utilities, which is the PLN. So in this case, if in the previous regulation, if PLN failed to buy the electricity, there is some take or pay. But in the other side, under this regulation, there is also some responsibility of the developer if they are not what you call, or they are failed to deliver the electricity on time to the PLN, then there is a deliver or pay will be applied for the investor. And then the other one, this is the one that I would like to give more emphasis related to the price and mechanism, because the feedback, one of the risks in developing renewable energy is related to the price, related to the cost, or related to the ceiling purchase price by the PLN. Some of investors say that the what you call the price that put it in the existing regulation is not attractive enough, cannot be what you call cover the investment costs that already invest by the investor developer. Then we already hearing the comment, the feedback from the stakeholders, and now we already actually finalized the presidential regulation related on the renewable energy. So under this regulation, there are 3 schemes of the tariff or price. One is a feed-in tariff. It will be applied for the renewable energy project with the capacity 5 megawatt. And the second one is the ceiling price. It will be applied for the renewable energy project with the capacity above 5 megawatt. And then the third one, there is another one, which is the price will be determined based on the B2B or based on the agreement by both parties. It is only applied for the hydropower plant peaker for all capacity, or waste power plant, biofuel, sea energy for all capacity. And then under this presidential regulation, there is also mechanism for purchasing electricity there is there are actually two schemes for recruitment, direct appointment and then direct selection. So you can see in here. And then the issue remaining in the existing regulations related to the BOT scheme, then under this presidential regulation, the BOT mechanism will be B2B scheme. And then the one thing that I would like to give the information, the regulation is also already cover what we call the compensation for renewable energy, meaning that if the tariff or the electricity purchase price is higher compared with the BPP, cost of power generation, then the differences will be covered by the government, and this is will be given to the PLN in order to keep the financial viability of the PLN still remaining better. And then under the regulation is also trying to give more support from the government before you are trying to getting support from its ministries, institutions, but now all the what you call the support from related ministries, institutions already put it in the regulations. For example, Ministry of MEMR, we are trying to formulating new renewable power development plan, and then quotas will be determined later on, and so on. So as a closing, I would like to emphasize that Indonesia has committed to achieve a 23% new and renewable energy target by 2025 as mandated by the National Energy Policy as well as a Paris Agreement. And new renewable development is our effort to achieve renewable energy target as well as reducing emission target. And as a part of that, we are trying to improve our regulation, not only as a part of creating of conducive investment climate, but we are trying to also lowering risk of new renewable development by providing very conducive regulation. So in this case, we are welcoming the feedback input from the investor developer if we are not to strengthen or trying to improve more our existing regulation. Thank you for listening, and I will give it back to Cecilia. Thank you.
Thank you very much, Pak Krisnawan, for this very comprehensive overview of the policy and efforts that are being made to de-risk projects. We're going to run through all of the presentations in this first session and hope that we will have some time for questions at the end of all of the presentations. Our next presenter is Pak Maman from OJK. Sir, the floor is yours. If we could have his slides pulled up, please. Thank you.
Thank you, Ms. Cecilia. How long do I have my time?
If you could keep your remarks to about 10 minutes.
Sorry?
If you could keep your remarks to about 10 minutes, please.
10 minutes.
Then
okay,
we can have some time for questions. And participants, feel free to enter some questions in the chat, and we'll try to get to those after this, all the presentations.
Thank you. So, Assalamualaikum warahmatullahi wabarakatuh. Good afternoon for all participants in this FGD. Pak Dida, kalau masih ada di room, Pak, hatur nuhun Pak atas undangannya. Thank you, Mr. Celia, for the time. 10 minutes is short time for me to spend in restroom, but might be a long time for me to spend being a speaker, especially in English. My English is in Indonesian or maybe Sundanese accent, so my apology if participants, especially from OECD or Cecilia, cannot comprehend my pronunciation. So other honorary speaker in the session, Pak Krisnawan, Pak Sofwan, Pak Bintang Wedana, thank you Pak for the sessions, and also for other participants in this FGD. I see many insurance practitioners here, so it will be helpful to match, I think, between the demand for the clean energy, the risk, the demand for the risk for the clean energy, and also the supplier in this case from the insurance. First of all, thank you, Pak Dida, so from CMEA, Coordinating Ministry of Financial Affairs, for inviting OJK as one of the speakers. My name is Muhammad Firmansyah. Currently, I serve as a Deputy Director for Special Examination of NBFI, Non-Bank Financial Institutions. Actually, I'm here to represent Pak Nur Hasan, Director of Regulation, Research and Development, OJK, since Pak Nur Hasan at this time have another meeting that require physical presence to boost the economy, recovery of economy. So he regretfully cannot join our FGD here. So as requested by CMEA, OJK is expected to explain about the regulations that support clean energy, especially for insurance industry. I think I have to mask. So in the second slide, we can see that OJK in 2017 has issued regulation number 51 concerning the implementation of sustainable finance for financial service institutions. So basically, this regulations is an umbrella regulations that cover most of the financial regulations regulated and supervised by OJK. So in the next slide, yes, in the third slide, and the next slide, please, Pak.
Najib.
Pak Najib. Thank you, Pak Najib. So in the in the next slide, in the third slide, POJK 51 of 2017 stated 8 general principles for the implementation of sustainable finance. Basically, 7 others were common in the others institution regulation, but OJK have a special mention for the developing priority leading sectors. So basically, we want to also support the sustainable financing for the poor. So for the MSME, also one of our 8 general principles of sustainable finance. So we have responsible investment. In OJK, we regulate and supervisions for the financial institution who had an investment activity like insurance companies, pension funds, and also banks in some of their activities. The second principle is sustainable business strategy and practices. The third one is managing social and environmental risks. The fourth is the governance. The fifth is informative communications. The sixth is the inclusive, and the last one is coordination and collaboration. So this is the 8 general principles of sustainable finance. In the fourth slide, Pak Najib, please. This is the timeline, the implementation for financial service under OJK supervisions to implement the sustainable finance. So the first batch in 2009 is the commercial banks, especially for the buku, the bigger one, buku 3 dan buku 4, and also the foreign banks. Well, as we can see from the presentation, from the 1st of January 2020, insurance company, Syariah Insurance Company, Reinsurance Company, and Syariah Reinsurance Company are mandated by regulation to implement the sustainable finance. So right now, 2001, it is the second year for the implementation for our colleagues from the insurance industry to implement this regulations. So maybe in the next session, yeah, we have Pak Nando from Jasindo and also Pak Adi from Aparindo, who will explain about real world implementation hopefully from this regulation in the industry. So in the next slide, in the first slide, This is what OJK require for the financial service, including the insurance, to implement the sustainable finance. The first one, insurance required to prepare the RAKB, Rencana Aksi Keuangan Berkelanjutan, Sustainable Finance Action Plan. So in their business plan, 1 month before the end of the year, insurance company must submit the RAKB, Sustainable Finance Action Plan, to OJK. So in this RAKB, in the next slide, Pak Najib, in the sixth slide. So the RAKB, in the insurance industry, the insurance company required to communicate the action plan to shareholders, so that the shareholders knows that what idea they're doing to implement the sustainable finance. So what kind of activity for the implementation of sustainable finance? There are three priorities for the implementation. The first one is developing sustainable product, sustainable financial product, or service development. This is the high priority. So we support the insurance to provide financial products, which is supporting the sustainable finance. In relation to this FGD, insurance product related for the clean energy to support the risk, to reduce the risk, to manage the risk for the clean energy products is what we expected. This is the highest priority, the highest valuation for the insurance company. The second one, if they cannot afford, if they cannot implement the implementation, they can prepare the internal capacity development, providing the training for their employees, and the third, they can provide the organizational adjustment, provide the risk management, enhancement for the risk management for implementing the sustainable finance. So the implementation for providing insurance product is our main goal to implement this POJK. In the seventh slide, the next slide, this is the priority action plan for the RAKB. So as I have been explored previously, we support insurance company to develop products. This is the main objective of this regulation. So insurance company could provide a relevant product for supporting the sustainable finance, including the clean energy. But we already know that basically, so in the next slide, Pak Najib, in this, is this still the scope for the action plan? Maybe we can skip to the seventh slide. This is also during preparation for the RAKB, Sustainable Finance Action Plan. Insurance company are expected to make it in line with the business plan for the insurance company. Make a adjustment with their organizational capacity and also the financial condition and technical capacity from their human resource, cooperation with the internal parties, communication strategy to the stakeholder, monitoring if they already have a product related to the sustainable finance, they should monitoring, evaluate, and mitigate, and also coordinate with the OJK, Ministry of Finance, maybe Ministry General Project, taxation for this insurance products. In the next slide, 10th slide. Oh, this is, we are also supporting insurance company to allocate CSR. If they have a CSR program, so they could allocate some of their CSR program in relation to the sustainable finance program. So this is also our support for the insurance companies. In the next slide. So OJK provide incentive for the insurance company by implementing the sustainable finance. The first incentive is OJK provide the human resource development program. We provide training. So each year we have several training for the insurance human resources, SDM from insurance company to learn how to assess the risk for the insurance product related to sustainable finance, how to provide multi-finance product related to the sustainable finance. We provide the training for that. OJK also awarding the Sustainable Finance Award. Unfortunately, the program is lasted for 1 year in 2016, I think, and also other incentives. Now, in the 12th slide, this is the report. So if the insurance company has already implemented the sustainable finance product, sell the product, have a premium accepted for the sustainable product, they have to report it to OJK. The sustainability report actually is a part of their annual report for the insurance company. So other participants, other stakeholders could see how is the implementation of each insurance company supporting the sustainable finance in Indonesia. In the next slide, this is the example for the business activity environmental friendly ESG implementations. So renewable energy, definitely our activities related to the sustainable finance, pollution prevention and control. This is also related to this. These two activities is related to this FGD, hopefully. Management of biological resource and sustainable land use, eco-friendly transportation, environmentally friendly buildings, green insurance, green building insurance, and others. Business activities and MSME in relation to our 7 principle for the implementation sustainable finance implementation. Last slide, I think, is about the potential implementation. So we are talking about the potential. Currently, Indonesia has, let me see my notes for us. Currently, we have 52 life insurance companies, 7 Sharia life insurance company, 72 general insurance company, and 5 Sharia general insurance company. The total, let me see it first. The total asset for the whole insurance company right now is 720 trillion rupiah. So we have to calculate it. Yes, 730 trillion rupiah, with the amount of investment is currently at 570 trillion. Investment for the insurance industry. So how is the potential? The potential is for the clean energy. So basically, people already know, yeah, that all quantifiable risks, insurable risks, can be insured, of course. Noted to the quantifiable, so the risk has to be quantified for the insurance company to provide the products. Right now in OJK data, insurance company or life and general insurance company have 9,516 insurance products with the great category, from unit link, endowment, property, motor vehicle, cargo, marine hull, aviation, energy onshore, energy offshore, engineering, liability, personal accident and health, credit and surety bond. Unfortunately, from out of the 9,000 something, the first of all, the one who give permission for the product is right now is in the another division in OJK. So we are not currently have exact out of the 9,000 how many exact sustainable finance insurance product, but currently we have a product for the pollutions legal liability. We have the product for the environment products. We have the pollutions liability insurance. We have the environmental pollution liability insurance. We have the mortgage interest additional perils. So some products are currently issued by the insurance company. We have AIG, we have Alliance, we have Intra Asia, we have Lipo, we have Magi, Taguna, who already provide, especially for the pollution. But for the clean energy, especially as it's been explained by Pak Krisnawan, about the risk for development, construction, operation, for the permits, engineering, PPA, policy, I think it will be not referred specifically for the sustainable products. Maybe it will be blended into insurance product for the tanggung gugat, legal liability, not specifically stated as a sustainable product. So the potential is unlimited. Pak Kris, the potential for the insurance to provide the product is unlimited, because basically tadi all insurable risk can be insured, as long as for the insurance company they can calculate the risk, they can calculate the premiums, they can provide it. But we also have to calculate the big number, the low big number, whether it's profitable enough for the insurance company. But maybe Pak Nando from Jasindo, they're quite experts to provide such a unique program, certificate product to provide for the renewable energy, clean energy, to provide a suitable product for this thing. So out of this potential implementations, it is only the example. So basically by this FGD, we will provide the market, maybe the market. So we our friends from MENKO will provide the market to market mechanism for the demand from the developer and the supply from the insurance company. So maybe the next session and session we will need the insurance. Our friends from the insurance company will hear what are the needed from the developer, and the developer could provide the information. So the market mechanism will be had an equilibrium, hopefully by this FGD. So I think that's my presentation. More than 10 minutes. I'm so sorry, Cecilia. So I give the floors to you. Maybe we will enhance during the discussion session.
Thank you very much, Pak Maman, and really appreciate this comprehensive overview on the sustainable finance action plans. It's a very challenging for you to condense so much information in such a very short time, and so apologies to everyone for the relatively short times to present such important information. With that, I'd like to invite our next speaker, Pak Sofwan, from CEO of Radiant Utama Insurance Co, to provide the perspective of the challenges you're seeing in project development for renewable energy projects, and your thoughts around where insurance could really help to de-risk your projects and facilitate access to capital. Pak Sofwan, the floor is yours. Thank you.
Okay, thank you, everybody. Assalamualaikum warahmatullahi wabarakatuh. Good afternoon. Today, I have the topic, the current challenges in developing clean energy, of course, from the developer perspective. Here, I see a lot of developer is joined with this webinar. So I think we will have the same problem to develop the renewable energy in Indonesia. Just short regarding me, now I'm the CEO of the Radian, but now I continue my study as a PhD student. So my research is the discipline of the sustainability reporting. The sustainability reporting is like the Maman explained, is implementation of the POJK 51 2017 to the company Indonesia. And I also certified sustainability reporting specialist and founder of indonesiagreen.com, crowdfunding for renewable energy donation based. So just to show you that I really have a big passion to implement the renewable energy in Indonesia. Radian itself is the company established in 1975. So today is more than 46 years. And just to show you that we have a lot of business regarding the offshore platform vessel. We have the 18 vessel. We do some construction business, and we don't have any problem to go to get the loan from the bank for the the oil and gas business. Actually, since the 5 years ago that we implement and expand our business to the energy business, so we include with the renewable energy business. So you can see that we already have the EPC contract in the industrial, in the isolated villages, the telecommunication, university, residential, and I also have the geothermal project now. Sorry, Merapi Geothermal as the minority share. We already deliver 80 megawatts. And we also have the joint cooperation with the university to establish the dual, the container house with the dual cell. It means the fuel cell and solar cell. The question is why we only do the EPC for solar only and the geothermal project as minority share. Frankly speaking, that we have the risk management team in our office that at the moment this is the only project that we can handle. That we can accept for the risk for that. So I think the big problem for us as developer, I think it will be the same with other developer who join with this webinar. I think that it's very hard to get the bankability project. It's very hard to get loan, and everybody try to avoid the risk from their parties. The easiest way to show the perspective of the bank financial institution, let me try to have the sample presentation from the PT Sarana Multi Infrastructure, the financial institution under finance department, Bank Negara Indonesia, the government bank, and Bank Sentral Asia, the biggest private bank in Indonesia, and the last is the United Kingdom Indonesia Low Carbon Energy Partnership, the MENTARI. So from this perspective, we will see how the bank and financial institutions see the developer of renewable energy when we visit their office. So first of all, that we see from the Sarana Multi Infrastructure for Zero, they have the map that show that the risk for everybody, every parties that are related with the renewable energy project. So if we see the color, they already assume that the sponsor and operator and project preparation consultant is the biggest, is the high risk, the high risk party for the renewable energy, because they have the limited equity, limited flexible financing, potential management, small and medium class. And then the other thing is the government regulation, and contractor is the medium to high risk. And then the bank and machine supplier is the medium, and the PLN as a off-taker is the low risk for that. So you can see that if we go to the financial institution, they will see us as the high risk partner for them. This is the slide that they present to us. Okay, so if we see from the bank, it's a government bank, we will see that they have the pro and cons. That we will see that if we meet with the bank, they always see that renewable energy is the high development cost, vulnerable because depend on the weather, unable to produce in large quantities. Yes, it's correct, because the scale of economics of the project is a problem in Indonesia now. Not available in all area, and then the large areas required. That's the con. So what happened? So the bank is have the mitigation risk for this. So they need us, if we developer should land acquisition should be the 75 until 100% acquisition already. They need us to provide the performance guarantee. They need us to provide the business insurance all risk for the business interruption. They need us to provide the revenue guarantee, insurance for the environmental, and then letter of undertaking, hedging, contractor warranty, and then everything, insurance for the political risk, even we have to provide. So that is the situation that mitigation risk that the bank asking for the developer to provide. And they also see in the exploration step, they want to have the loan for this. It should be provided by sponsor or investment bank. And every state, construction, and operation and maintenance, they still have some instrument to avoid the risk to the bank. So you can see here, they have one of the thing is the problem is the waterfall. So if the waterfall is also a big problem for us, because in the waterfall hedging mechanism, they will keep our money 3 times of the installment monthly in the sum account. So this is the way they are covered for the insurance. And we see in the private bank, what happened with the private bank is BCA. If we go to the BCA, they will see that, okay, renewable energy is a new experience for the bank. They are not familiar with this, so we have to explain to the bank what is the renewable energy step by step. And every time we have to explain to them. And then quality of the feasible study regarding the hydro, soil, fuel supply, PPA, take or pay clause, cost overrun, all is the risk that it seems that they are not familiar with the renewable energy business. And the other thing, what they have to do, they try to combine financing, project financial with the corporate financing. It means that in our company, let's say that we have the renewable project, we have to combine this project with our oil and gas project in order to capture and to avoid the risk if something happens with renewable energy. We have to supply the installment from another project. That's done by the BCA. So bankability is the project is still main focus for the bank. So all assets should be pledged. Cash flow waterfall scheme is the same with the BNI, and it's syndicate loan and everything. So there is the issue with the bank if we developer go to the bank. And the other thing is from the offshore, the UK assistant. So they also see the challenges in the renewable energy project in Indonesia. There is a limited number of signed power purchase agreement. And the biggest problem, of course, for the developer is the low rate returns due to the BPP. If we want to have a business with the PLN, local content requirement, license permitting land acquisition, limited experience for developer, smaller RA project, and capital constraint, upgrade, incumbent regulation, and limited business area permits. This is the offshore, the UK company to see the business renewable energy in Indonesia. So with this situation, so it's very limited financial support at the moment that want to support. Even we have the OJK regulation regarding the sustainability reporting, financial sustainability. But if we discuss regarding the risk, it's another problem, it's another side. So all the financial institutions in Indonesia still see that the renewable energy project is still categorized as high project. It's not favorable. I mean, it's not favorable. They prefer the usual business, usual project that they already know and already well known regarding the risk. And for them, is it the new experience? So they still try to assess the contractor is very careful in for a long way to go to assess the contractor. And the impact for the developer, I think we will get the high interest. If we want to, if you have the project in the renewable energy and we get the rupiah. So if we go to the bank, if in government bank, currently the rate is around the 12 until 13% for the rupiah. Private bank is 10 until 11%. So this is still high. And then collateral, if we don't have, if they are not enough for the project financing, they will need a lot of collateral as a pledge or guarantee for our loan. And then, like I said before, there's a lot of guarantee requiring waterfall mechanism, a lot of guarantee, revenue guarantee, down payment guarantee, construction guarantee, everything. They ask a lot of guarantee for this. There is the impact for us to have to do the renewable energy project in Indonesia. This is very, very the changes. So what we should do, I think we have to have the strong support from government. I think Pak Krisnawan already explained regarding the regulation. The Pak Maman already explained also from OJK, POJK 51, 2017, irrigation reporting. The spirit is for this is very good that I mean the financial institution, the insurance institution have to have the roadmap and increase by year, every year they have to increase the mix of the loan that they give for renewable energy. But the problem is we have to see what the consequences and everything. It should be the reward and punishment. Maybe it will be good for the tax and everything. So everybody try to implement this as soon as possible. BPP, I think regarding BPP should compare apple to apple. It means that now we have to face BPP, hydro, geothermal, waste to energy, everything. But it should be like the solar panel, it should be compared with the diesel powers, let's say like that. If solar panel you have to compare with the coal cost or the BPP, it's not really fair. At least in some area, if we have the diesel power and we replace by renewable energy, the BP will be declining because the diesel power is the highest. Almost all renewable energy is lower than diesel power cost. And then for the tendering, the lowest price is not automatically appointed as the winner of the project. It means that you have to check the quality of the contractor. It's very hard to, it's easy for the project to make the calculation. Everybody, I think, is the same calculation. How much the interest, how much the cost, how much the engine, how much the construction cost. So sometimes the lowest price is not reasonable price. But because of the I mean, I don't know, it's very easy to avoid the risk from the audit from government. So just appoint it as the winner. And then the project is not going on, just stop. And then the other thing is legal standing from local government. I think we already see it, the BKF from government. It's like the biomass. We just study to do some project in biomass. We have a problem with the feedstock, let's say. The feedstock for the 20 years, we assume in our calculation is the 400 rupiah. But who is guaranteed for the 400 within 20 years? I mean, there is some scheme I see already prepared by government, but not yet implemented. That I mean, the legal company, the local government company, BUMDes, BUMD, that can participate for this support by government. And then last for this is we have the insurance product or there is the renewable energy for all parties. I mean, for the developer, for the bank, and for everything. I think that's all from me. Thank you very much.
Thank you very much, Pak Stefan, for this excellent overview of the challenges that developers face. And we will look forward to the next session to really look at in depth at the role of that insurance can play in this. So for our final presentation in this session, we will have a quick look at the use of insurance for energy efficiency projects. I'd like to invite Pak Bintang from the Asset Center for Energy to make the presentation. And Pak Bintang, if I could ask you to run through your first slides pretty quickly and focus more towards the end of your presentation on really the solutions that insurance could provide for efficiency, please. Thank you very much. Floor is yours.
Okay, thank you for the time, Cecilia. So this is a presentation about the insurance products for energy efficiency project. First of all, my name is Bintang Widana from the ASEAN Center for Energy on behalf of Panuki here. Due to some high meeting, he cannot attend here. So in ASEAN, ASEAN Energy, we have the ASEAN Plan of Action for Energy Cooperation, or the APAI. And in this publication, we have some cooperation between the ASEAN member state. That is for the all of this matter. And we will focus now on the energy efficiency and conservation. We have a target of energy intensity reduction target of 2000% in 2020 and 32% in 2025, based on 2005 level. And for now, ASEAN has attained a 21% of energy intensity reduction level in 2019. So this is a good sign of the changing of the energy intensity in the ASEAN. For the energy efficiency and conservation, we have 5 outcome-based strategy and programs. That is the harmonized the EE standard through labeling and private sector and EE financing, sustainable building, industry or the EMS technology uptake, so the energy management. And then lastly, it is the transport sector, more of a fuel efficiency, and also the electric vehicle system and the biofuel in some country. So we will focus on the OBS2, outcome-based strategy 2, that is the enhanced participation of private sector and financial institution. We have 5 action plan here. And for 1 and 2, we already have a annual event, that is the ASEAN Energy Business Forum, and also the ASEAN Energy Efficiency and Conservation Award. For the third part, that we have to establish partnership schemes for ENC with cluster and incubation center and financial institution, and also the private sector. For the next action plan, that is the initiate the development of ASEAN Energy Management Certification Scheme. This is already existing in some country, but we want to revamp the energy management certification in the regional scale. Lastly is to conduct information sharing on innovative EE financing mechanism. So currently in ASEAN, this is the status. So mostly we have the institutional and policy framework in the commercial, industrial, and also the standard and labeling. However, for the building and transport, many are still having a preparation to have it. In the financing scheme, most of the country have the dedicated EE grants. However, for EE equity and EE energy efficiency guarantee, we still lacking in the ASEAN. And for Indonesia itself, we have some study here about the industrial EE market. The industry sector contribute around the 39% of Indonesia GDP and takes up 40% of total energy consumed. There is a significant untapped potential here that can be up to 44% of improvement by 2040. However, the 60 million enterprise here in Indonesia, most of it, around the 98%, is at micro scale or the small and medium enterprise. So with the current EE project are deemed high risk and unprofitable, and people have other priority in the investing. So it makes a lack of attractiveness in the financial mechanism here for the energy efficiency. We are trying to divide the criteria for the industrial sector. First, from the energy use and the greenhouse gas emission. So how the fuel use and what sector of the industry here is important in here, because we can see if we can cut off also the greenhouse gas emission, not only the energy intensity. Second is the systemic technology consideration, because outdated technology is easier to remove or to change with the newer one. So the importance of targeted system in the sector is very important. like a motor system or boiler system usually is easier to replace than the other kind of system. Next is the economic consideration. That is about the feasibility of the financial institution and also the industrial sector. And some of other consideration that is maybe about the scale of the enterprise and then the regulation preferences from the financial institution willing to give a loan, and also the overall financial readiness of the sector in the industrial sector. This is an example of what to say about the industrial system and also the facility in it. So we have here about fuel, electricity, and steam is usually used in industry, and they sometimes have on-site generation. So industrial facility with on-site generation will consume also fuel, not only electricity, and it can be quite high for the energy energy produced there. And then next is the main process, that is the industrial process energy, can be the heating, cooling, and refrigeration, under process and electrochemical, and also some small but significant side, that is the machine drive, the pump, fan, and etc. This is the most energy intensive parts of the industrial system, and we need some high energy efficiency parts in here. Lastly is the facility, so maybe the office building or the living site that is non-process energy, like the HVAC or the lighting and other facility. This is quite low, but we have some potential here, and mostly with this non-process energy is the perfect place to, how to say, subsidize the waste energy to electricity recovery in here. This is an example of the selected industry in Indonesia, and based on ranking there on the system. I gotta skip this. This is the how we trying to create in the study about the selection process and the criteria. So the bigger one in the industrial level criteria. So it, like I said before, what kind of industry is it and how much energy and greenhouse gas emission it produces. Next is the system level. So the system level is what kind of system we should tackle. Is it the energy generation, or is it the process, or maybe on the non-process facility? Lastly is the technology level criteria. In here we could say that we aim more directly into the technology already existed and we can implement in the industrial sector. Perhaps we have some efficient pumps, so we will change into the more efficient pump in the technology level criteria here. This is the example. So industry, like I said, maybe from sector industry, from the previous 5 industry before, and then system, what we want to change, motor system, boiler system, or the sector specific system like in cement industry. Next, energy efficient technology. So I said before, the pump is very common in the industry and use a quite high tech energy here. So maybe if we have a better pump system, it can increase the energy efficiency in the industrial sector. This is an example of the financing scheme. So usually the small and medium enterprise here, if we want to have an EE project, they will have a help from the technology provider to have an energy efficiency project, and then financial institution will have a loan to them. However, some loan is needed, de-risking, so the credit guarantee and the insurance is needed here, as before in the insurance. So insurance will have a, like auditing the projects and then giving the technology provider, and it can give the insurance company making sure that it is risk-free, and it can help the financial institution to give a loan. From the ACE side, ACE can be a bridge between the international organization to have a loan to the small and medium enterprise. As we have now in this project, we are trying to have a loan from the GCF, or the Green Climate Fund, ACE and KDB, Korean Development Bank, would like to have a loan to multiple enterprises in Indonesia through the EE project like here. So what is the challenge and recommendation here? From our study that the availability of energy financing support is still limited and information on mechanism is often incomplete or outdated. So we recommend to this is review the most successful financing scheme in the region because we have the similarity in the ASEAN in the climate and the economic sector. So it will be relevant information can be provided and we can update it through the stakeholder consultation. Next is the lack of transparency and unclear approval procedure for financial products and service contract. For this, we have to develop a relevant guidelines, also to include lowering loan amount or technologies bundling. So technology bundling here is something like we collected some EE project into one big agglomeration of a project, so we can entice or attract more investment in there. Next is low energy price and subsidies in fuel and electricity. This can be a challenge because the amount of saving made is not quite high. So we need some revision for the fossil fuel subsidies, especially fossil fuel. And we can change into more renewable or energy efficiency here. So it can be both sides of the energy, green energy. Next is the limited awareness of EENC measure, financing and skilled human resource. We need to conduct awareness raising here. So like ACE has done a technical assistance to the industrial sector and also to the financial institution to have a awareness about the financing in the energy efficiency and conservation. Last is the stakeholder consultation involving private player that is still missing. So we have to increase the involvement of private player in the implementation of financing, reporting, and verification of energy efficiency project. In here, we also aid the government to have a adequate regulatory framework for the private sector to act within. Thank you for your attention. This is the QR code for our publication. Back to you, Cecilia.
Thanks very much, Pak Bintang, for taking us through the very important areas of energy efficiency. When we're looking at clean energy investments, it's important that we also consider energy efficiency in addition to renewable energy. With that, I'd like to thank all of our speakers from this first session for providing us a very comprehensive overview of the regulatory environment, the challenges faced by project developers. And I'd like to now pass it over to my colleague, Lee Wolfram, who will moderate our next session. We're very pleased to be able to bring in other areas of the OECD's expertise. He is a policy analyst from our Directorate for Financial and Enterprise Affairs and leads the OECD's work around financial management of catastrophic risk. Please, the floor is yours to moderate our next session. Thank you.
Great. Well, thanks very much, Cecilia, and good afternoon to everybody. It's a pleasure to be here. So I know we're running a little bit behind. I won't take too much time. I'll provide a very quick introduction to the work that we do under the Insurance and Private Pensions Committee, and a quick introduction to our speakers. We've done very little work, to be clearly honest, on these issues, and so I'm very much here to learn, like the rest of you. So basically, the Insurance and Private Pensions Committee, where I work in the Secretariat of this committee at the OECD, it brings together ministries of finance and insurance supervisors to share experience and best practices on policy issues related to insurance. Basically with the ultimate goal of ensuring a vibrant insurance market that meets the financial protection needs of households, businesses, governments, and supports financial, economic, and social resilience. So as Cecilia mentioned, my main focus is on financial protection for catastrophe risks, so natural catastrophes as well as cyber risk, and as you can imagine, more recently, pandemic risk. So my day job is really around sort of analyzing the insurability challenges for these risks, and potential public policy measures that can be implemented to basically support the availability of affordable insurance coverage. And so I think what we will hear in this session today is that there's actually, quite a number of parallels and to renewable energy risks, where there are some difficulties in accessing available coverage that's necessary for sort of unlocking affordable financing of these projects. So I'll introduce quickly our speakers. So we have 4 presentations and I think 6 speakers. And I'll ask the speakers to be as efficient as possible in their presentations, as I think we are running a little bit behind. So we'll start with Pak Adi, who is the chair of APERINDO, the Association of Indonesian Insurance and Reinsurance Brokers. So brokers, of course, play a huge role in helping project developers acquire the insurance coverage they need to protect against project risks. And have a unique view of the coverage available and any gaps or challenges in securing insurance coverage. And I also understand that Pak Adi is not only the chair of the Broker Association, but a bit of an expert in energy project development himself. He'll be followed by Tobias Grimm, who's the Senior Manager for Climate Risks and Green Tech at Munich Re, based in Sydney, Australia, who has been helping develop innovative climate-related insurance solutions at Munich Re in different parts of the world for, I think, more than a decade. And correct me if I'm wrong. Then we'll then go to a joint presentation by Richard Green and Matthew Hooker from Allianz Global Corporate and Specialty. Both of them are based in Singapore, and both of them look at sort of different elements of renewable energy project development and sort of the insurance needs, both at the sort of the development and construction phase, as well as during operation. So thank you to Richard and Matthew for joining us. And then we'll end with a presentation, a joint presentation by Pak Luki and Pak Nando from Asuransi Jasindo Indonesia, which I understand to be one of the largest general insurance companies in Indonesia, and obviously a very important provider of insurance coverage for the energy sector in Indonesia. So without further ado, I'll invite Pak Adi to make his presentation. Thank you.
Thank you very much, Lei, for the kind introduction. Hello, everyone. Good afternoon. As introduced, my name is Adi Sofiadi. I'm currently the chairman for the Indonesian Broker Association of Indonesia. So on our first slide, I'd like to present to you a little bit about us, i.e. APERINDO. We are actually established in 1978 as a, at that time, brokers are not well known in the insurance industry in Indonesia. So the players at that time thought that it would be helpful if the brokers have an association. So we come up with an association. Initially, it was called ABAI, ABAI. Then during the course of the years, it changes because we also have members from reinsurance brokers. As you are aware, in Indonesia, we have, under the guidance of OJK, in order for us to be able to fully operate, we need to have a license. So in Indonesia, we split the operation between the direct brokers and the reinsurance broker. As is at the moment, we have totally 199 members that consist of 158 insurance brokers and 41 reinsurance brokers. Of that, we have also joint venture companies, the Marsh, the Aeons, the Willis companies operating in Indonesia. Next slide, please. I'd like to go through a little bit of facts and figures with regards to the contribution of brokers into the overall Indonesian insurance premium cap. So I'm just here showing you the facts and figures of 2019 and 2020, where according to the facts and figures, business generated by the brokers to the Indonesian insurance premium as a total. In 2019, we contributed about 25% of the total premium coming into the basket. And in 2020, we, because of the pandemic and all that, the figure slightly dropped down to about 1%. So in 2020, we contributed about 24%. Next slide, please. In the first session, we heard from Pak Maman from OJK that in Indonesia, in order for any entity operating in the insurance industry, they have to go through the regulations that is currently being supervised by OJK. In the past, it was managed by the Ministry of Finance, but in accordance to the new regulations, it's now OJK. Under the OJK Rule 68, 2016, any brokers, be it direct brokers or reinsurance brokers, we have three functions, which is providing assistance in terms of placing accounts or risk, claims function, and also finance functions. So these are the main functions of a broker operating in Indonesia, as probably elsewhere in the world. I'm not going to go through the details of the broking services. I'd be happy to discuss this with you directly, but because of the time constraints, I'd like to flip through to the next slide. Next, please. So this is one of the important issue for investors operating in Indonesia, because if they have an issue with regards to risk that needs to be insured under the insurance law number 24, 2014, all insurances must be covered in Indonesia using the Indonesian insurance industry. That includes insurance companies and also broker companies. So this is an important issue. In the past, on a personal experience, I've dealt with investors from overseas where they are funding certain projects in Indonesia, whilst they already have a placed insurance coverage, but because of this regulation, they have to find ways on how to make it work in Indonesia. So sometimes colleagues from the insurance companies will be acting as the issuer of the policy, and behind the insurance company, if they do it themselves or they use a insurance broker, they can place it back to the original package. So that's where Aparindo comes in, because our member, we can be an entity assisting upfront. We can also assist on the back end of the insurance company in order to provide the security that is sought by this particular project. Okay, Aparindo member, because of the criteria of a broker also acting as a consultant to their clients, it is a demand for members of Aparindo to also become a consultant in such a way where they will find ways on how to assist in the demand for risk cover for certain projects or certain items of properties. With regards to renewable energy, Indonesia has just been introduced into this type of industry, and specifically for insurance companies, as far as I know, we still do not have a specific product that looks after, in specific to renewable energies. It is most probably a tailor-made type of policy consisting of existing products that is licensed by OJK, but also it can be tailor-made in such a way so in order to cater for the demands of the coverage itself. Next, please. Okay, this is a busy slide. I hope you can read it. It's a bit small, but I'd like you to take your focus on the right-hand side. You may. This is what we think on renewable energy, the demand for insurance coverages will be. So during the construction phase, you will need a construction all risk type of policy. It's construction all risk or it's an erection all risk policy. And then, of course, once it's operational, you need the property insurance for the asset against earthquake, against volcanic eruptions, tsunami, because Indonesia being an archipelago nation, and also we are what we call in the ring of fire in terms of volcanic eruptions and so forth. So this is a prone risk that is needed to be covered whenever a project or a property is being set up in Indonesia. And then, of course, during the operation of the company, sometimes there are glitches along the way. The profits that are already put up do not meet up with the actual. So insurance can come in with what they call the product called business interruption coverage. And then, of course, liability mentioned earlier by Pak Sofyan from Radian is one of the developers in Indonesia. Liability insurance, this is regarding comprehensive general liability, political risk, GNO, whatever is needed by the client. And then again, Indonesia being an archipelago state, we have a lot of water in our country. So marine insurance, cargo, marine hull, everything related to water, that can be covered under the marine insurance. And of course, from the side of the investor, there needs to be financial risk. It's for the banks that are providing funding for the projects. And in terms of the workers itself, we have a product called workers' compensation. Of course, we have a mandatory worker compensation in Indonesia called BPJS. But this worker compensation that I'm talking about here is in excess of the BPJS limits. Other insurances, this is with regards to tailor-made type of coverages that is specifically tailored for a certain project or certain property. Of course, in Indonesia, probably not, later my colleague from Jacinda will be explaining more in detail, but the way that I am aware, insurance companies are also limited in terms of capacity. So if there are other requests for higher limits, then colleagues from Aparindo, the insurance brokers, can assist the Indonesian insurance companies to look for capacities elsewhere overseas. Next slide, please. Thank you. Okay, this is our field of what renewable energy projects in the future will mean specifically for members of Aparindo. Firstly, it's going to be a strong and growing sector of industry that needs to be focused on, meaning that members of Aparindo will be looking at new products, new tailor-made products, new capacity, be it domestic or overseas, and also new types of insurance wording that is not currently available in Indonesia. And of course, our friends at the insurance companies later on will be, when we introduce them with a new type of wording, they will have to liaise with OJK to get it licensed as a product that is sellable in Indonesia. Secondly, there will be heavy financing in the early stages of these projects, meaning that there will be a lot of demand for finance type of coverages, be it available in Indonesia or overseas. One of the high demand that is currently in the market is a product called trade credit insurance that is covering the interest of the investors when they invest in Indonesia against political risk, against non-payment situations. The other thing that we feel that renewable energy means for the member of Aparindo is that there needs to be diversification of mitigation of risk, i.e. that members of Aparindo would also need to learn themselves new ways to expedite any risk that is involved, and how to mitigate it immediately in order to secure that the project will not be delayed because of late recovery of the claim and so forth. Also, the fact that renewable energy is a new sector for Indonesia, there will be a need to transfer the risk to third parties, be it insurance companies or other types of risk transfers. And this needs to be maintained quickly, because otherwise Indonesia would not be able to be assisting in the reduction of carbon into the air in accordance to the Paris Accord. Lastly, there will be a broad range of new products that will be introduced into the insurance industry in Indonesia, meaning that our friends at the insurance industry would also need to look into how they want to create new products, new wording for specific items. And this needs also to be discussed with OJK for the appropriate licensing. Next. Okay, this is a proposal from Aparindo based on the experience we have had with the upstream industry. So talking about renewable energy, as was being presented in the first session by Pak Krisnawan, we understand that in Indonesia, there is a lot of regulations and compulsory issues that are, or mandatory issues that needed to be secured by any investor or any developer. Even Pak Sofyan mentioned that. So in order to streamline the interaction between ministries, regional governments with central government, we would, in this forum, we feel that we would propose the establishment of a state agency that is looking specifically on renewable energy. So this is a hub to connect between the needs of the investor, the stakeholders, be it international or local domestic investors and stakeholders, and connecting it to the needs of, because we're talking about insurance or risk, to connect with the risk that is involved, using either Aparindo or the national insurance companies to provide protection for the risk that may incurred during the operation or operation or production of the items. So in this slide, Aparindo will be acting more like a consultant, as a risk consultant or risk management consultant or insurance placement, which is the basic function of a broker. And also we can act in terms of scarcity of capacity in Indonesia. Aparindo members can also act as a insurance placement to place it overseas. So this is basically the interaction that we think will be beneficial if Indonesia is going to be focusing into renewable energy projects or operations in the future. Next. Basically, that's what I'm trying to present in this opportunity, and I thank you all for your attention, and I welcome any questions that you might be needed to be raised. Thank you. Back to you, Lei.
Thank you very much, Kadi. I very much appreciated your perspectives on the challenges as well as a potential solution. Hopefully we'll have a bit of time to discuss that later on. So we'll move quickly next to Tobias Grimm from Munich Re. Tobias, the floor is yours.
Yes, thank you, Lee. Thanks for having me in this interesting roundtable. Just to introduce myself, I'm Tobias Grimm, originally a geoscientist. I've been working with Munich Re now for over 16 years, most of the time out of the headquarters in Munich. And I'm in charge of the climate risk and green tech strategy and business development here for the Australian market, but I serve also, since it's my time zone here, for all the East Asian activities. Maybe someone can share my slide deck that we can see that. Thank you very much. And move ahead with slide 2 immediately. So I would like to talk about use of insurances to support renewable energy projects in Indonesia. Just a brief overview for those of you who are not familiar with reinsurance industry. So we take at the end peak risks of the primary insurers of the world. We are the world's largest reinsurer, actually, and yeah, it's an old business. We were founded already in the 19th century, have a very strong balance sheet and doing all kinds of business in the insurance sector. So we take all the risks globally. And just last year, of course, it was also a huge large loss event, the pandemic event that hit also our balance sheet. But nothing surprising to that. And maybe we move on to the next slide, please. So that's a little bit our climate strategy, how we cope with that changing risk of climate change. We have a big history in that topic. We started already in the 70s, so 50 years ago, collecting data from natural catastrophe losses. And so that's one of the peak risks a reinsurer has. And we realized that there is a changing risk, and since the view into the back mirror is not representative for the future, that's why we set up a climate strategy, and that ended up in that what you can see in that slide. It has two parts. It's the disabling one and it's the enabling one. The disabling one is to some extent a little bit unpopular because we have to explain to clients that we will no longer continue business to some extent, but we do have a guideline and we don't withdraw from business immediately. Actually, we want to become net zero to be in line with the Paris Agreement and with the climate targets. That's why we have, for instance, declared that we will no longer insure thermal coal, new coal mines, new power plants and related infrastructure to thermal coal. And we will expand that over the coming years and also withdraw our insurance capacity from the oil and gas sector over time in order to become net zero until 2050. We have a similar strategy also for our investments, since an insurer always has two sides of the balance sheet. It's our underwriting book and it's our investment side. And of course, we reduce also our own emissions and we will become net zero to that extent already until 2030. What is a little bit more relevant and interesting is, of course, that enabling piece. What can we do to foster the energy transition globally to become carbon neutral and to decarbonize all the economies worldwide? Well, we provide our expertise. We do have huge expertise in many areas. And that's what we share with our clients. We develop service products and other products, and of course also risk transfer solutions and data that we share. And we have established a couple of partnerships and corporations as well. Next slide, please. So I guess something very important in that context when we talk here with you guys in Indonesia is the Agenda 2030. The Agenda 2030 is the driver for sustainability in all areas. And I think that the Sustainable Development Goals are a core of the agenda. And objectives cannot be achieved without any nutcut and climate considerations. So that's why the Sendai and the Paris Agreement are so important. When we talk about on the Agenda 2030 and the Sustainable Development Goals, we clearly see that public money alone is not sufficient to achieve the Agenda 2030 targets. This is why we have to address also the private sector. And due to COVID, I guess it's not a secret that the Agenda 2030 targets are even more jeopardized. So the pressure increases also to governments to mobilize even more private capital, and thus to help de-risking the renewable energy landscape and establish maybe also some blended finance structures where we all can put together our efforts, both from the private and the public sector, to achieve the targets. So what can we actually contribute to de-risk renewable energy projects? Well, I guess in the talk just before me, we heard a lot about the traditional insurance business solutions, so property solutions, force majeure solutions, business interruption, machinery breakdown, liability, and so on. So that's the business that is normally placed with the local insurer and ceded to the reinsurers. So I don't want to talk too much on that. Because I do not believe that I can contribute to that explicitly here. Where we can help here, and that's what I would like to introduce you in the next two slides, are the two sectors, technical risk and political risks. And that's actually the slide, we call it Green Tech Solutions. Green Tech Solutions is a concept, and it's a team basically that's all over the world. We have huge in-house expertise, and we do not cover here property or liability covers. We remove technology and performance risks. So what we actually do is we provide the guarantee. We take the guarantee from suppliers, from manufacturers, that their, for instance, modules for the solar performance, for the solar industry, does achieve a minimum performance over a certain period of time. And that's what we take on our balance sheet for up to 30 years. We can combine that also with the default risk, just because we realized, and the market has seen that many suppliers have gone bankruptcy over the last years. So we combine these two approaches, the minder, the technical underperformance with that risk of default of the manufacturer, so that the project owner does have the security that any potential warranty claims can be fulfilled and met, even if not by the manufacturer itself, then by Munich Re. We are pretty aware that these solutions are suited primarily for the private sector and less for the public sector. This is maybe also to leverage private capital investors for the secondary equity market. For instance, when development banks sell their equities to third-party private investors after 8 or 10 years or so, then this concept and these solutions could really trigger additional private sector capital. And that's what we often hear is we have to invent new concepts to leverage private capital, and that could be one part of that. Next slide, please. That's actually already my last slide for today. That's the concept for political risks, and what I brought here and contribute is a concept that we have already developed in other markets. That's in Africa. That's the concept is called AEGF. That stands for African Energy Guarantee Facility. And this AEGF concept is for us a good example, a tangible example for a product concept that is already successfully implemented in the public sector space. Actually, it covers political risks, including extended risks such as a breach of contract by governmental parties, or confiscation or off-taker default, something like that, or even after a period of time when you do have a power purchase agreement between the off-taker and the independent power producer. Then the public off-taker realizes that it can source the electricity somewhere else cheaper. And that's, of course, a risk. and this risk can be covered in such a concept. And in that concept that we have established in Africa, this is supported also by the development banks. In that case, it's supported by the European Investment Bank and by the German development bank KfW. They provided $1 billion in reinsurance capacity for energy access, for energy efficiency and renewable energy projects, but they have to be in line with the Sustainable Development Goals. And this backs then the second loss tranche and improves financing conditions significantly by removing this key political risks. And that's actually then the blended finance scheme, because we as private reinsurer provide also reinsurance capacity, and together with that public money. Projects to be eligible are picked according to the Sustainable Energy for All initiative. And Munich Re has founded for that purpose a spin-off. That's a consulting company. It's called SFR Consulting. They are providing technical advisory services and facilitate the whole process. And they verify these eligibility criteria on a regular basis to ensure that the projects are still met the Sustainable Energy for All criteria. This concept is scalable to Asia. It's scalable to Indonesia, and we just recently took notice that European Green Deal has increased capacity significantly and expands the original footprint from Africa to Asia. And we also have quite established contacts to leading development banks in the Asian context. So if there's an interest, of course, we could facilitate follow-ups on that. But of course, we always need a primary insurer who takes the political risks, and then both we and the public sector space could back that somehow, and we could create something. One last word maybe on funded project finance concepts. Munich Re becomes also more interested also in non-OECD countries in cooperation with development banks also to invest in projects. Yeah, that's it from my side. Happy to follow up if of any interest. Thanks for your attention, and back to you, Lee.
Great. Well, thank you very much, Tobias. That was really interesting, and again, I appreciate your focus on solutions that have worked elsewhere and that might be transferable to other markets. And I happen to know a primary insurer who will be speaking next, so maybe you can find the primary insurer you're looking for to make that work. So I've been informed by the organizers that we're actually going to take an extra 20 minutes to ensure we have some time to discussion. Hopefully that works for everybody. But I think there's lots to discuss. So hopefully that will give us a chance to do that. So I'll turn next to our colleagues from Allianz Global Corporate and Specialty. So Richard and Matthew, the floor is yours.
Thank you, Lee. This is Matthew Hooker speaking. So I'm responsible for the energy and construction line of business for Allianz. Perhaps if the slides can come up, I'll just give you a little bit of background on Allianz. So today we will be the second German insurer contributing to this forum. So I work for both Richard and I work for the Allianz Global corporate and specialty arm of Allianz, and we focus on very large corporate insurance requirements and specialty insurance requirements such as energy, construction and power. If we can move on to the next slide. So we're going to split the presentation between myself and Richard, and I think Richard will probably feed off a little bit of the discussion from Munich Re around particular products that the insurance industry have developed to support green energy and the renewable sector. And I will just give you a little bit of perspective on how the insurers look at the renewable sector from a broader range of products, particularly through the development, construction, and operational phase. If we can move on to the next slide. And a lot of that, and one more please, a lot of that experience that we're bringing to the table has come from our European roots, where the renewable energy sector perhaps has had a little longer to mature, and the solutions and products that support that industry have also developed further, and perhaps touch upon how some of those lessons can be brought into the Asia market in particular. The background for Allianz as a large insurer of conventional power has really been built around the exposures that the industry bring to the insurance market. So from a conventional power perspective, the exposures are very much driven by very high asset values, very large business interruption values, through the model that power throughout the world has been brought to the consumer with very large utility companies, very large distribution companies, and the huge investment that entails. And the insurance industry has developed a suite of products that support that traditional industry. Now, what the renewable energy shift has changed the dynamic is the projects and the delivery of power to the consumer is fundamentally changing. We're shifting from very large asset values, often state-owned or owned by very large corporations, into smaller projects that are delivered perhaps more locally, and obviously the change in fuel mix from solar to wind and hydro, etc. And I think that has required a shift and a change in the products and how we deliver those products. Individually, the risks on renewable projects can be considered to be slightly smaller or less severe than the risks of a very large conventional power station. But collectively, the risks remain very real. And the ability of a smaller company to deliver and risk manage a particular project, I think from an insurer's perspective, is something which is very challenging. So I think sometimes there is a perception that certain parts of the renewable energy sector are lower risk than the conventional sector. And I think that from certain physical risks, such as explosions and the high tech that you get in gas turbines, I think, yes, you can argue that some of those risks are a little bit lower. I think from an insurer's perspective, one of the challenges is around the ability for these emerging companies to be able to deliver the project and deliver the risk safely, which obviously is part of an insurer's consideration of taking on that particular exposure onto their balance sheet. What's happened from a development to address the smaller nature of some of these renewable projects is to look at trying to bundle products together. The project needs to have a certain critical mass to provide a level of interest to the insurer to support the project with their capital, so that you find that different products have started to be put together, from the construction, marine cargo liabilities, delay in startup, and then on to the operational risks for the property and the business interruption liability, bringing those together into one package so that there's a little bit more critical mass to the insurer to invest their capital in there. But equally, I think it's one of the challenges that we've seen in Asia is the projects that are coming to market at the moment are relatively modest in size, and the level of experience or the pipeline of projects is challenging for us to then be able to really bring all of that experience to the table. So I think on the general side of renewable energy, most of the risks involved, most of the physical risks, the liability, the revenue, financial risks, there are products that have been developed and are available to support these projects. I think the challenge is often in the scale and the pipeline of projects to really attract the insurance market into bringing that capital into the projects. And as I said, although the perception can be that certain renewable projects offer a lower exposure, those exposures can't be underestimated. And certainly without the volume of business and without the pipeline of business, it's that balance between risk and exposure for the insurers is one that we're still we need to move the momentum so that there's a greater volume of business that can help with the volatility that otherwise would exist. So I think that I'll leave a little bit of time for Richard to perhaps expand on his side of the renewable energy space, and then happy to answer some questions later on in the open forum.
Thank you, Matthew. Can I just move forward a couple of slides? I think 2 slides. So, and one more. Great, thanks. So just to introduce myself, my name is Richard Green, and I'm the head of Alternative Risk Transfer and Capital Solutions for AGCS, or Allianz AGCS, based in Singapore. So that's who I am, and Matthew and I work in the same Allianz office out of Singapore. I thought this quote was quite interesting, and relevant to our discussion today. We can't do anything about the weather at Allianz ART, but we obviously trying to provide instruments which protect projects and protect clients and protect banks and investors from climate risk where we can. So if we can just go to the next slide. So ART consists of a number of core segments, and I put them down there. Obviously, the first on the left is climate risk. Now, we've talked about quite a huge variety of different risk exposures today to renewable energy projects in Indonesia, and all of those risks are relevant, and all those risks are particularly relevant to potential lenders in the context of how do we make these projects more bankable. How do we de-risk them? Well, one of the risks we haven't talked about actually is weather risk. And obviously, when you're looking at a renewable energy project, there are a host of risks there, but one of the key risks, which in my view, lenders are starting to pay attention to, is the climate or weather risk itself. What if the sun doesn't shine in the way that you anticipate it's going to, or what if the wind doesn't perform in the way you expect, there's obviously a significant consequence there in terms of the revenue that the project could generate, and therefore its ability to repay investors, whether it be debt or equity investors. So at Allianz ART, we have actually got a climate solutions team that focus on weather risk. The two teams actually are based in New York and in Zurich, but my role in Asia Pacific is to represent those teams and to offer those products in this region. The other thing I'll just mention quickly, because I know we're short on time, the box to the right, capital solutions. I'll just make the point that it's not just insurance companies that are interested in investing in climate risk. A lot of the capacity that we get, we actually get from the capital markets. So pension funds, hedge funds, in certain cases, high net worth individuals. So we work with a specialist fund in Bermuda called Nephelah Climate. And what they bring to us is risk capacity, not from the insurance market, but from the capital markets, because the capital markets are very interested in taking these types of risk exposure, in addition to the other stuff they invest in, like bonds and equities and real estate. They're becoming increasingly interested in investing in renewable energy risk, and in particular, natural catastrophe and climate risk. So interesting that a lot of support doesn't actually come from the traditional insurance markets in this area. Next slide. Thanks. So when it comes to weather risk or climate risk, I mean, from our perspective, it could be, frankly, any kind of weather. I mean, I put up some examples here, you know, rain, snow, temperature. Obviously, in the context of our discussion today, I think the relevant risks are, you know, wind risk. What if there's a lack of wind at the site, or lack of sun? If it was if it was hydro, it could be lack of precipitation. But my point is, whatever kind of weather you're worried about, that weather is insurable. And I think some people will know that, but I think for many people, that's potentially a little bit of surprise that you can insure the weather risk component of a renewable energy project, and that financiers are looking as closely as that as perhaps some of the more traditional insurances. Next slide, please. So, as I said, I'm going to keep it brief. So my message to the conference is that, you know, we can insure climate risk. Matthew's spoken about, you know, operational and construction risks, and Tobias has spoken about political risks and equipment performance risk, as you will, and all these things are, of course, incredibly relevant to any potential, you know, to any potential lender. And as I say, I would add climate to that list. So, you know, what might a transaction look like? I mean, this is something that we were presented with by a broker to take a look at. Obviously, to move forward with this, we'd have to look at finding a partner, a local partner in Indonesia. We'd have to get the policy wordings registered, so on and so forth. So this is quite conceptual at the moment. But this is what they can look like. The insured in this case is not a bank, but it is actually a renewable energy fund that's investing money, looking to invest money into renewable energy projects. In this case, wind in Indonesia. Type. Now it says they're derivative, which in itself is quite interesting. So at Allianz ART, when we look at providing climate protection, we can provide it either in derivative format, in which case it's a security, or we can provide it in insurance format, depending on what the client wants. Now, lots of banks, frankly, prefer transactions to be executed in derivative format because they're much more comfortable with derivatives than they are insurance, but we can do both. Tenor simply means, you know, how long can we provide coverage for? In this case, 10 years. And frankly, 10 years would be about our maximum policy period, to be honest with you. And the way these deals work is that you come up with a projection or a model number called an exceedance probability, or a P number. And I've given a definition of the P number there on the right. You come up with a number of what you think the facility or the array should produce has an exceedance property, which should produce at least that number 50% of the time. And that's what P50 refers to. From an insurance perspective, we then provide coverage which cuts in if the production falls significantly below that P50 level. And I didn't set the P50. It could be P50, it could be P60, it could be P90, and that's for the client to decide what protection they want. The point I'm making is we cut in below, beneath that level. In this case, our cut-in point or our strike point is at 198.32 gigawatt hours, which is 80% of that P50 number. And then we provide protection, which equates to $100,000 for every gigawatt hour that's missing below our 198. However, that is limited to $5 million per annum and therefore $50 million for this contract. So that's purely illustrative, but it is a case that was presented to us. Whether it will move forward, I don't know. But my point is, for renewable energy projects, be it wind, be it solar, be it hydro, I think climate risk is an important risk for lenders. We've seen that in Vietnam and in other parts of Asia Pacific, including Australia. And it is possible to buy climate protection or weather protection in the event that the wind performance or the solar performance is not what the models, not what the models anticipate. And that coverage can be provided in derivative or insurance format, depending on what the client wants. And obviously, if there's a problem on the weather risk side, then the turbines or the panels won't generate sufficient power, and the project revenues would be at great risk. So yes, it's an important component, but as we've discussed today, one of many products where I think the insurance industry can help de-risk these projects from a banking point of view and make them more bankable. So I'll stop with that. I don't know whether Matthew, you want to stop there, whether you have a bit more.
Happy to stop there. I just saw a question that actually came up about the tenure, Richard, as to why we limit the tenure to 10 years when the asset obviously will be around for much longer.
Yeah, the reality is that both ourselves and the partners we work with are not prepared at the present time to take risk beyond that period. I think 10 years from an insurance policy is actually quite a long period of time. I mean, most policies would struggle to get to 10. So the
contract could be renewable after 10 years.
Yes. So if 10 years isn't long enough, we have two options. One is to renew it after 10 years. The other option, of course, that we could look at is to do an annual rollover. So each year we could extend by essentially each year that expired, we could extend by another 9, if you will, and just have a rolling contract, if that's what clients would prefer. Yes. So I'll hand it back to you, Lee, in case there are any questions. Unless, Matthew, you've got anything you want to add?
No, AGCS over and out.
Lee, we'll hand it back to you because you don't take up all the time for questions.
Great. Well, thanks to both of you. That was great. That was really interesting, and as you can see, generating questions. We do have 2 more speakers, 1 more joint presentation. I will encourage all of our participants to ask any questions in the chat, and as you can see, we can all see them and pick them up, and hopefully we'll also be able to pick them up at the end of this last presentation. So at this point, I'll invite Pak Luki and Pak Nando, please, to take the floor.
Okay, thank you, Lee, for this time. Good afternoon, everyone. First of all, I would like to introduce myself. My name is Luki, currently positioned at PT Asuransi Jasindo as Head of Product Development and handle any kind of developing of product. And I would like to thank you, Padida, for invitation. However, we would like to send apologies from our CEO, cannot attending and should be a speaker for this moment because have another agenda, can't be left. Okay, everyone. For this session, my colleague Pak Nando will be present our presentation with the topic application of insurance in renewable energy project, and as well information Fernando, currently as a head of a business development at PT Asuransi Jasindo, handle all of any kind how to networking business as well as. Okay, Nando, maybe you could take this time to start the presentation.
Yeah, thank you, Pak Loki, for the introduction. I will be sharing all, or the committee will be sharing. Okay, thank you, Pak Najib. I think maybe my presentation will be there. There will be redundant in the materials because maybe that's the risk of becoming the end of the presenter, yeah, the last presenter to present. But however, I will try to present the materials that we have prepared. Next slide, Pak. Yeah, talking about risk, I think the most important thing that we have to look in the renewable energy projects is the risk level involved in the project itself. In the insurance perspective, we see that there's 3 phases in the renewable energy projects. The first phase is the project planning and design, which the risk level starts from 0 and rise up, and then entering the second phase into the project construction phase. The risk level will be the most maximum risk level that the insurance will take into account. And then maybe the third phase will be the project operation. I think that the risk level will drop down, but not. But the risk still there is still operational risk that the insurance need to take into account. Next part. From the risk potential, we see that within the 3 phase, there is a financing phase, and then the site selection and evaluation, the planning and permitting phase, and then the engineering and designing phase, and then the procurement and construction phase, and then the operational phase, which is the power plant and transmission phase. So within these different phases, we see that the risk potential is different from one another. In the financing phase, the risk potential will involve economic movement and cost overrun, which will involve if the project can be done with the same level, the same economic value, or there will be an increasing level of budget in the project. And then in the site selection and evaluation and planning and permitting, the risk potential involved is risk of planning, both in design, formulation, and calculation, and the use of planning theory. And the risk of permission also will affect the project, whether it will be delayed or even can be cancelled. And then in the permission subject will be what the land acquisition will come into play, and the risk of lawsuit from all party will be a risk potential that we have to see also. And then in the engineering design, we will see the risk potential is risk on planning, both in design, formulation, and calculation. And then the engineering risk, that will be involved. In the procurement and construction, I think the risk of implementation of the planning and design will also, we have to look at that. And then the risk of procurement and delivery of the project materials, insurance must also take into account. Risk of sabotage and terrorism is also a risk that insurance will have to look at. And then the risk of human resources health, which involve the contractors and the people that works in the project sites. And for the operational risk, we see that the risk of property damage will be the most important that insurance will have to look at. Also the risk of human resource health, which is the employees. And then the main risk in the operational phase is act of God. Maybe Richard and Matthew have also mentioned the climate risk, which will influence the running or the operational phase of the renewable energy projects itself. And also the third-party liability, also liabilities or liability from third party always will be the risk potential that will involve in all projects, especially in the renewable energy projects. Next, Pak. Okay, so insurance will also see what risk mitigation has been done into the project, so that insurance can evaluate whether the project is insurable or not. In the financing phase, we see the conservative economic stability prediction and the guarantee from the government will be a couple of points that affects that the financing risk in the financing phase. And then moving forward to the site selection and evaluation, the contractors should ensure that the legality of legal aspects has been provided, and also getting a guarantee from the government is also important. Under planning and permitting, the main important thing is running the project following a strict timeline and preparing licensing documents completely and according to procedures. And from the engineering and procurement phase, which is the construction phase, the contractors should choose a proven technology over the first of a kind or experimental technology, which will be important aspect whether insurance will take on the risk itself or not. And then in the construction phase, the implementation of strict supervision and project management will be an important factor whether the insurance will accept the risk or not. And also it is preferable if there is a penalties for any lateness in the successful or not successful of the project. In the operational phase, we see that a good project management with strict supervision will determine if insurance will accept the risk of the project, and then also penalties for lateness, and emergency plans and fire prevention also important aspects to look at from a project, from a renewable energy project, whether this is energy, this is an account or a project that the insurance can accept or not. Next part. A couple of products that we can think of that all of the projects phases, the insurance can provide insurance products or variations, such as from the financing phase, there is credit insurance, which will cover the credit defaults of the contractor, and then payment guarantee also covers the credit defaults. In the planning and site selection and evaluation and planning, insurance products such as directors and officers liability insurance, and also comprehensive general liability, which cover for any lawsuits from third party. And then in the engineering and design and procurement and construction, examples of insurance products are CGL, comprehensive general liability, marine insurance, which consists of marine cargo, marine hull, and marine liability, which usually combine with contractors all risk, or erection all risk, or contractors plant and machinery. And then terrorism and sabotage insurance, also we have the products. And then motor vehicle, health insurance, workman's compensation, and employer's liability. And then moving to the operational phase, insurance usually have a product like property or risk, machinery breakdown, earthquake insurance, well insurance, maybe well insurance specifically for geothermal energy, for the well control insurance. Also, we have business interruption, motor vehicle, again liability, and then health insurance for the employees and the workers at the site and at the plant. Also, workman's compensation and employer's liability. In underlying with that, the projects usually have a tender process. So insurance have guaranteed products, which is a bid guarantee, performance guarantee, advance payment guarantee, and also maintenance guarantee, which can cover the tender or the tender projects itself. Yeah. So I think in conclusion, given the limited time, I think Jacindo, as a representative of the industry, insurance industry in Indonesia, supports fully the development of the renewable energy projects in Indonesia, right from the start of the project, which is in the financing phase, up until the operational phase. We are always in close cooperation with all the stakeholders, including the OJK, with respect Pak Maman, Pak Firmansyah, as the regulators, and then with the insurance companies, with reinsurance brokers and rebrokers, with respect Pak Adi Sofyadi ya Pak ya tadi sudah menampilkan from Aparindo, and then from reinsurance Allianz and Unclear also in this meeting. I think the most important thing that we have to look at the insurance usually will cover mostly risk involving the sudden and unforeseen risk, which is directly involved with the projects, the construction projects and the operating side, rather than the successful or unsuccessful of the project itself, yeah, from the renewable energy being produced. With that in mind, I think the insurance, if the risk is acceptable, the pricing will ultimately depends on the reinsurance backup, because renewable energy is a very specialized risk, and usually the reinsurer will drive the pricing itself and the capacity. I think Matthew or Richard also mentioned capital markets also directly involved in backing up the reinsurance panels. Yeah, I think that's all that we can present given the limited time, Pak. Mungkin maybe Pak Lucky will add before we close.
Thank you. Okay, well done, Nando. Thank you for your short presentation. We hopefully about presentation Jacindo will be helpful for and support about the renewable energy project. Okay, Lee, back to you. Thank you very much. Good afternoon.
Thank you very much, Pak Lucky and Pak Nando. I think that mapping that you've done between. Sorry, I don't know if you can hear me. Can you hear me now? The mapping between risks and insurance coverage and mitigation options was I think really helpful. So we don't have very much. Thank you. So I will ask. There's a couple of people that have raised their hands, so I will ask them to intervene, and please intervene very briefly with your questions or comments. We'll start with Rahmat and then Penny, please. Okay, so let's go to Penny. Penny from BKPM, I believe. You could unmute yourself and ask your question or make a comment. So I'm not sure if they're having some difficulties reaching us. I do have a question of my own, actually for any of the speakers. The one issue that was raised, I think, early on by Matthew, was that one of the big differences between the energy sector and the renewable energy sector is a lot of the producers are smaller, and so I wondered actually some parallels to some of the pooling arrangements that have been created for different types of insurance challenges, sort of, for example, governments pooling publicly owned assets to sort of present a pool of assets to the insurance market, or even some of the sort of corporate risk retention groups that have been created in different places. Whether that's sort of a potentially interesting solution to sort of bring a number of different small producers together to sort of have a more direct access to the insurance market, and maybe more favorable access to the insurance market because of the diversification of going to the market together. I don't know if that's Matthew or Richard or.
Yeah, Lee, I'll respond to that, and thanks for the question. I think we've certainly not seen any activity of that sort, either within institutions, private enterprises, even countries who are looking perhaps for their insurance market to collectively bring a bigger solution to their customers in territory. We haven't seen a lot of that activity happening in this part of the world, but you're right, Lee, that I think that could be helpful. The point that I was trying to get across is that individually the renewable projects lack a little bit of critical mass for large insurance companies to really get excited about, and I think there's also a lack of common standards when it comes to risk management and maybe risk allocation within the contract structure that then underpins these projects. So I think anything that can align standards and perhaps bring a little bit more volume to the market would be interesting and would support perhaps releasing a little bit more capacity to these projects.
Thank you, Matthew. Any of the other speakers have anything they want to add on that point? I'll ask. There's CMEA Rahmad. Your hand is still raised, so maybe you've. Okay, your hand's not raised anymore. There is one more question in the chat, and I think that's probably all we have time for. So I don't know if you saw it. How does insurance appraisal take into consideration as necessary for planning and risk management, including keeping premiums at a proper level and establishing proof of loss before loss occurs? So please share how insurance appraisal takes those elements into consideration. Maybe I'll start with our colleagues at Asuransi Jacindo, and then maybe I'll turn it to Tobias if he wants to add anything to their answer. So,
I think, Lei, thank you. I think to answer the question, maybe given that renewable energy is a very specialized risk, usually we turn ourselves to our reinsurance for the pricing, and therefore usually the reinsurance backup or the rebrokers will present us for the premium, and for planning and risk management to keep the premium at the proper level. I think that depends. Usually depends on the in what the contractors or the project owners have plans and have risk mitigation they have in order to convince insurance and reinsurance that the risk will be a very acceptable risk, not will become an insurance claim. Yeah, I think that is the most important thing. Yeah.
Lee, happy to add on a couple of comments on that. I think that typically when an insurer assesses a risk for consideration, they're really looking at a number of key factors. So you would have the technology risk that the particular project presents, whether that be a wind turbine or PV solar or hydro or geothermal. So you have a technology risk, you have a location risk, so the exposure that the project has to certain natural hazards hazards, natural perils such as flood. For solar, there's also quite an exposure around fire. And then to operation, and then the key suppliers that that they are using, whether it's the contractor or the designers or the particular equipment manufacturers that that are engaged. So I think that that's a very sort of typical underwriting approach, and all of those would be going into consideration when it comes to the pricing. So if a client is looking to moderate insurance pricing, they would really need to present a fairly comprehensive position that covers those key factors.
Yeah, I concur to that, Lee. So once again, insurance will turn ourselves to our reinsurance. Yeah.
Tobias, I'll give you a chance if you can make it brief, but I really have to end.
Yes, maybe a last comment from my side. So what we've seen over the last years is that insurance rates have developed, I would say. Prices were a little bit higher, and there was some time, I would say, a couple of years ago when it was pretty, I wouldn't say unpopular, but it was really tough for the insurance industry to stay in the game just because the loss ratios were really tremendous. What we've seen across different parts of renewable energy, so for the wind sector, for the PV sector, and the premiums were pretty low. In the meantime, that's the perspective I can give as insurance industry, that the premiums have stabilized a little bit, and that kind of business has become a little bit more competitive, and it's better to be again in here. But there was a time, and I mean, taking into account that renewable energies are very often new technologies that don't have the track record, and that's something new. And in these new technologies, losses do occur, and that's pretty normal. And the industry is learning also from former losses. And that's that evolvement what we have seen over the last couple of years, but I guess it has improved over time.
Great, thanks, Tobias. So before I turn it over for the closing remarks, I just want to thank you all, the speakers in this session and the previous session. I know I personally learned a lot about this topic, and there's obviously lots more to do, and hopefully we'll have a chance to continue this discussion. To make closing remarks, I'd like to invite Norbert Mas, the Deputy Country Representative at GGGI Indonesia, to make some remarks. So Norbert, the floor is yours.
Thank you very much. I think you can hear me. I take the heads nodding. Yes, thank you,
yes.
Thank you. And I'm very conscious of time, so I'll make it very brief. I definitely appreciate everybody's time joining this event today and the presentations. If you found it as insightful as I did, you will definitely go back to the recording and the presentations. I'm glad to say that we are working with the Ministry of Energy on formulating a project that will help us having more of these events and actually picking up some of the specifics, some of the barriers and gaps that we, I think, all agree we need to work on, and zoom in and try to find specific solutions with everybody involved. It's not yet fully developed and approved, but I hope we can launch it this year. Thank you so much, and I hand it over to the colleagues from the OECD.
Yeah, I think we are thanking everyone to already joining the event today, and thanks Norbert for your closing statement. So I will not go back to the MENKO's staff because we are very running late. So once again, on behalf of the organizer from MENKO office, from OECD as well as from GGI, I would like to thank all of you for having this fruitful meeting. I hope there will be a kind of follow-up after this meeting. Then we will sure that OECD and other international organizations also will support the Indonesian to develop the clean energy. Thank you Bapak Ibu semua, terima kasih atas kehadirannya. Mohon maaf bila ada kekurangan dalam pelaksanaan acara ini. Thank you very much. And thanks to all the participant speaker, Pak Maman, Pak Lucky, Pak Nando, Matthew, Richard, Lei, Tobias. Thank you all.
Thanks, everyone.
Terima
Thank you so
kasih.
much.
Terima kasih.
Thanks,
Thanks
goodbye.
everyone.
Thank you
Good
very much.
afternoon.
Pak.
Thank you.
For the
Good night.
Terima kasih.
yeah, thank you, Pak.
Pak Maman,
Terima kasih, Pak.
Terima kasih Pak Adi, Pak
Pak
Lucky.
Nando,
Sama-sama, Bang. Terima kasih. Sampai jumpa.
Pak Adi, sampai jumpa.
Sampai jumpa.